The hottest month to buy stocks is just around the corner, and we've selected 3 that look primed for a strong July. And we'll cover off all the key information so you can manage these stocks like a pro. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide. I'm Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil, and it's also everyone's favorite pastime month, and that's tax month. So let's hope that we can provide some interesting stocks to mitigate that.
Yeah, I don't know if everyone's favorite month is tax time, but I think what comes out the other end is. But let's get right into it now. I want to bring up the seasonality chart of the All Ords Index first, just to set the tone here. And the reason why July is often a really powerful month, take a look at this. This is the seasonality chart for the average monthly performances for the All Ordinaries Index from 1983 to 2026. So we've got over 40 years worth of data, and July traditionally is the strongest month in terms of performance on the All Ords Index. So we are walking into one of the best months to be getting ready to look for some opportunities. But let's now dive into our first opportunity, which is News Corp Limited. Now, this one on the screen is looking very interesting, Pedro. I just want to outline some of the themes on News Corp before we get into the chart, because when you talk about News Corp, everyone's still, or a lot, the mindset is still newspapers, right? Now, some of the major themes to watch with this one, particularly related to AI, is that News Corp has signed a major AI licensing agreement with OpenAI and Meta worth hundreds of millions collectively over multiple years. Instead of AI killing media, News Corp is getting paid by AI. That's something to watch for down the track. And the second is REA. Now, also the falling interest rate scenario potentially. Now, REA is one of the biggest holdings is REA News Corp, believe it or not. And the REA's latest results showed really strong revenue growth and continued strength in the Aussie residential property market, despite a mixed housing market. So they are, I think it's about 20%, their expected growth is looking like forecast for REA. And News Corp's stake in there is one of the bigger ones. So add on top the potential of a falling rate environment over the next couple of years, and we may see a really nice tailwind for this stock. But what excites me more than anything is have a look at where it's moved back to. Long-term momentum, really, it's textbook really what's happening in this stock. And why it's so positive right now is this is a relatively slow compounder, but nevertheless, there is plenty of upside to be had with a stock like this. And what makes the $35.50 level so important, it's that previous all-time high where you really find out whether stocks are willing to accept a new base long-term. Right now, the answer is yes. We've broken that previous all-time high, we're pulling back into it, and we've managed to find support above it for now, which is quite promising. Also moving back to the long-term rate of rise. So this stock is not extended in any way from a technical sense or looking euphoric or really risky in terms of price action. In fact, it's relatively uniform, and we're at a key level that we haven't been until 2023. So really nice on the monthly chart, the way it's unfolding. If I just zoom out on that weekly chart, one thing that really stands out to me is when we look at the way the trend is unfolding right now, from the all-time high, we've broken through momentum. We've had a few months to test it. We're seeing volume pick up on the up moves, fall away on the down moves, and now we get to find out, how we're going to operate on this next leg up. And I'd really like this one to hold. And guess what? It's doing that pretty much exactly at this level at $41. So if it holds this 41 short term, starts to break 44, this gets really exciting that we've turned the corner at a major low. And what you'll also find sometimes at major lows and major highs is that euphoric type blow off. And we just saw it. Look at that. Massive selling on the 6th of February to signal the end of the move. If this was more serious, and we're not out of the woods, I would like price to get above that 45 high to really confirm that. But right now, if this were really serious on the sell side, we would have seen a continuation of the selling, but it literally stopped a week later, stopped at that big level of support on that monthly trend line, broken through, looks like we're turning the corner. We've got to hold these 40 levels. Sorry, mate, I've probably covered everything, but this one here, Pedro, I think one of those reversal type plays potentially that's showing signs of a move up.
Yeah, it's become really a growth stock, hasn't it? News Corp, and I totally agree. Not all media companies are dead, especially with ChatGPT and the like now searching for content online. But there are stuff behind paywalls and unique value that these media companies can still provide. So on the chart, I'll just quickly add that the previous fall was at 37.87% before we had that rise. And right now we're at 37%, basically exactly the same amount of fall that we had previously. And it has come back to that trend, like you mentioned. So the probability is to the upside. And that's really how you have to think about trading and investing is what's the probability that this stock is going to go up if I buy it, based on rules or buy it today or whenever. Obviously, there is the other probability that it just keeps going down. But I would say that that probability only really increases once it breaks below that $36. But for the moment, we need to assume that the price will continue to be going up. But I think that this one is looking very interesting.
Yeah. All right. Now, before we move on to the next stock, we've got a few absolute rippers coming up, so stay tuned. But if you want to get in touch with us here, this is where you can officially find us. YouTube, our website, Facebook, TikTok, Instagram. You won't find us on WhatsApp ever. So please avoid anything you see from people claiming to be us asking you for money or to invest money. We would never ask that of you or money from you. And we have been seeing our name go out in certain avenues that are not us. So please, you'll see a link or you'll see in the description where you can find us on our official content channels. But let's now get into our second stock, which is Lovisa Holdings. Pedro, your thoughts on this one? I know we had a bit of a chat off air about you looking at Lovisa saying, okay, this looks quite interesting.
Yeah, it actually came up in one of my fundamental analysis scans, and this might surprise people as we're mostly focused on the technical aspect of trading. But you may be surprised to hear that we actually do cover fundamental analysis in our course and what you really should be looking at, because there's a lot of metrics really out there. So you obviously want to know which ones are the most important. But what I like about Lovisa is that it's actually got forecast growth coming up in the next 3 years. It's currently got a P ratio of 29, which is a little bit on the higher side. It does pay a 3.5% dividend. But what really stuck out to me was the 82.6% return on equity, which is very high for a retailer, really. And I mean, when you're buying earrings from China for 50 cents and then selling them for $30, I'm not surprised at that markup and that return on equity is there. So right now it's it's following that nice uptrend. It's really been a growth story since 2016, and from that breakout of that high there, it's really done, so far it's done 503%. It did go up almost at that 1,000%. And then that's in the last 10 years. So that's pretty good return. And it's established itself as a strong retail company. And right now, the fact that it's reversing, the fact that it actually came down and reversed, hit that trend and bounced off this level. It actually didn't trade below that $19. It's holding up quite nicely. And you can see that every time that it has these consolidations and then has that reversal, it does it in a similar fashion. Back here, that was the COVID low. It traded up and then came back down. It didn't actually trade below that low and then kept moving up. So we are having that similar scenario. Right now on the monthly, it's closing up. So we are finalizing the month of June, and it is closing on a nice high. Let's have a look at the weekly chart here. And this has consolidated nicely here all throughout March, all the way up to June. Right now, this could either be an accumulation ready to break up above that $24. It has broken above this downward momentum as well, I would say. It's just poking its head out there. High volume, there's not a big spike in volume right now on that up move, but it is sustained and nice, and it's a nice and liquid stock to trade. And then we've got, of course, that level back here at around that $20, like I mentioned earlier, holding it up, and that's really been a strong level in the past. So we've got that range, $20 to $24. It's trading at the upper range of that previous consolidation. and it looks like it's about to break that $24. I think that if it does break it, this is going to be a nice trend, nice strong company, good return on equity, good fundamentals, and it could be one that will return a nice potential profit in July coming up, and you've got a potential 37% upside until we hit that next resistance at $34.
Awesome. Now, if you want to learn some of the skills that Pedro has just shown and we show on this show, a very good introduction is this book, How to Beat the Managed Funds by 20%. It is free. It's from Dale Gillum. You just have to pay the shipping. The link is in the description in this video below. But let's now get into our third stock, which is Neuren Pharmaceuticals. Now, they came out with some big news today. The company just received a major boost with European regulators recommending approval of its Rett syndrome treatment, Daybue. If final approval is granted, the company could receive a US $35 million upfront payment, ongoing royalties, and potentially hundreds of millions more as sales grow across Europe. So let's dive into the chart of NEU to see what is happening right now. And my data is not updated today, but Pedro, I'm sure when you show your chart, it's going to be updated because Neuren is basically up, I think, up to that $16, $17 today. So it's up 19% on the day. The market has really accepted the news as very positive. And so, I mean, we'll get to your chart to have a look. But for me, big picture, there was a reason to be looking at this anyway before the news came out. And that is, came back to a hugely important level at 11.23. Look at that. Since October, May, and also recently March, buyers have been found here. And the buyers have taken price up quite drastically from these levels. I mean, really, the upper limit of this is somewhere, went up 134% on that run. Again, from these levels, it went up another 100% on that run. So you're looking at serious opportunities around here, almost doubling type opportunities on this stock at these levels. And they may not come again. You know, the last time it came back to this trend, which happened from 2021, tested in 22, you had an opportunity in 25, and now you're getting another one. So it was a few years between the last move. But the fact that it's operating back on this gradient, I quite like it. It's shot out now to the 16 and 17. So an assumption that we move higher and break into potentially these $22 regions is very reasonable, which represents about a 47, 48% upside growth, which is nothing to sneeze at. So for me, this one is really one of those ones where on the news it's being supported. And right now it is a must watch. But as always, trying to make a decision on the day of the news is always tricky. You may find you might get a better opportunity tomorrow or in the coming weeks once price settles down. So be mindful of that, or it could just continue on and accelerate. But always, that's why it's so important that you do have a structured set of skills to be able to interact with price and really hone your trading, because it's so important when you get in and when you get out, even more important than what you buy. So again, we teach all of that. So if you want to learn, go and check out the website. But Pedro, just quickly, mate, your thoughts on NEU?
Yeah, look, I agree at your point to really think about whether you want to get in straight away after the news, because when you look at the history of the stock, it's got some history of having a bit of a consolidation after these type of news and approvals. You can see back here in 2023, it had a similar move where it was trading sideways, and I'll highlight this sideways consolidation so then everybody can see the periods that I'm talking about. So I'm comparing this period here, 2022, to the current period, and we can see that volume spiked on this up move. It was a similar gap up as we have seen today. So this is the latest data here, the latest bar, that 20% rise. We've got a gap. And then in the eventual weeks, it just kind of did nothing and then just came back and just trailed it down. You could have picked it up for a little bit cheaper as if you would have got it on the close, so around that 20% cheaper, and then it was off again. So you might want to wait until something similar like this unfolds, until you can recognize a pattern, like something forming in terms of short-term bar analysis or something along those lines. But on the other hand, we do have this other breakout period here where the price did break away and then just continued upwards. Of course, the eventual move fell. But this is really looking at the smaller picture. This is when you start to fine-tune your trades. Really, that bigger picture, like Phil mentioned, is of that long upward momentum, and also of this strong support level at $11. So I would say that the range right now is $11 to that $19 dollar mark, say around that $18 even. So whether the risk to reward ratio is there, I'll leave it to you guys. But this is very good news. It's a pharmaceutical company that has got FDA approval at the end of the day. So that's always encouraging when it comes to these types of companies.